Hey there, I'm Julie Tam, managing broker of LYN Realty in Houston, Texas, and you're watching Smarter Real Estate here on YouTube. And don't forget, we're also linked from LinkedIn and Facebook, so be sure to join me weekly on Wednesdays. Not necessarily every week, but many weeks, always on Wednesdays. Anyway, thank you so much for joining me today as we are talking about the real estate investor mindset. I'm going to give you 5 key takeaways, and this is not one of those get rich quick overnight type schemes. That is not a scheme at all. And in fact, it is quite the opposite. You know, my video series is called Smarter Real Estate because we do things smarter around here. I pride myself on that. That is what sets me apart as a real estate broker is being smarter, making smarter decisions, having smarter perspectives and viewpoints, and just analyzing and looking at things with a smarter perspective. So today I'm actually sitting in my home office on our little bench, cushion, nice, comfy little seating here by the window. And I'm going to go over these 5 points. So, first of all, I want you to know that because this is smarter real estate, this video is not like the ones that you see on TikTok or Instagram that are appealing to the lowest common denominator. Those video makers basically think that you're stupid, that you're dumb, and that you will listen to what they have to say and follow their little 3-point hacks or whatever to go into real estate. My 5 pieces of advice today are not hacks, okay? These are not things that you can quickly do and get rich. These are long-term actions and mindsets. And that is the key thing to investing, okay? I did not go to college for real estate. I did not major in it. Yes, I got my real estate license. I am a licensed real estate broker after spending several years as a real estate agent. So I've been in the business now full time since 2012, and I grew up in the business watching my mom run our business, LYN Realty. And of course, my parents had been investing in real estate since before I was born. And so they've had different types of real estate investments over the years, including condos, single family homes, empty land, so lots, and that sort of thing, and also commercial real estate. I'm focusing on residential today because that is my sole area of expertise. I don't want to spread myself too thin and get into commercial. So I only know the basics of commercial from what I learned in my real estate courses, but it's definitely not something that I practice in a professional sense. And so I'm not an expert in that. Okay, first point that I want to make is that real estate investing is not about getting rich quick. You've heard about people who like to flip homes and they, some are successful and they're able to get rich pretty quickly if they can flip the home within a few months. But then some people get in over their heads. They really don't know what they're doing. They think they can watch TV shows and figure it out. And then when they get into it, they either didn't know all the details. TV doesn't show you everything, of course, and or they ran into problems that ended up costing them dearly. I am talking about long-term real estate investments that you would hold. So you would buy a home, like our company manages 1 to 4 family homes. So that would be condos, single family houses, duplexes, triplexes, and quadplexes. Townhomes, for example. The condos can be in sprawling communities like a complex that would look like an apartment complex, or they can be in mid or high rises. And so these are homes that you would buy and then rent out long term. So we're not talking about vacation rentals like Airbnb or VRBO or something like that. That's a totally different model. This is a long-term tenancy that typically is a 1-year lease minimum. Okay, and so when you are buying this property, you are going to have costs going in, and those are going to be your closing costs that you would pay the title company. And if you're getting a loan, you would pay an even higher amount of closing costs to the lender typically. If you're paying cash, you don't have a lender, but you still have your title company closing costs. And then a lot of times the homeowners association or HOA will charge you a transfer fee, and also possibly you would have to pay a couple of months, for example, or more into the reserves of that HOA. This often happens with condos, but it can happen with single family homes, especially those that are in master plan communities, which we in the Houston area are all too familiar with. So the point I'm trying to make is this is not get rich quick overnight. You need to expect to own that home for at least several years in order to recoup those closing costs, plus to actually make some profit through the cash flow month to month. You may have some initial costs. For example, you may have to do repairs, updates to the home before it is rentable. And so that is going to all add up. And so you don't want to be trying to buy a home and hold it for just a couple of years and then turn around and sell it. The home also may not have even appreciated within that time. Unless you were so lucky, for example, in Houston, to have bought the property before the COVID-19 pandemic. And then all of a sudden during the pandemic, when prices were just skyrocketing, and so then a couple of years into the pandemic, you decided to sell. Still though, I don't think that's a good idea, because since then, prices have continued to increase in many areas. I'm speaking of Greater Houston specifically. And so the longer you hold, you're going to have more appreciation. The properties that I have purchased since, now it's been, as of the date of this video, it's been more than a decade, okay, maybe like 13 years or something like that. And so basically since about 2012, 2013, they have appreciated so much, much more than just during those couple of years pre-pandemic and after the pandemic began. Okay, so we're talking about like 10 years almost leading up to the pandemic, and then of course these few years after. And I'm pretty sure they'll continue to appreciate going forward, though no one has a crystal ball, so I cannot guarantee that. But that's just the trend of real estate, right? If you look over decades, prices just appreciate. That is just the standard, usual way that it goes. Just like stocks, right? You may have, ups and downs, but it's usually ups and downs going like this. It's going in an upward path that the ups and downs are going along. Okay, so that was the first point, is this is not a get rich quick. There's no overnight success. This is long term, okay? And then the second thing is about discipline. Having enough discipline to invest early and to hold. So of course, the younger you are, now these younger generations are really getting into real estate. There's real estate clubs that never used to exist at universities, for example, and they're starting to invest in real estate, small at first. They may not have enough cash right after they graduate from a 4-year university, for example, but they're starting perhaps in their 20s instead of waiting until their 30s, 40s, 50s. I have clients who don't start until middle age or beyond, even when they're like closer to retirement, and they realize, wow, I really would like to have something for retirement. I wouldn't say it's too late, because it's always a good time as long as you get in and you're holding, for several years, and you may live for a couple more decades after you retire, right? And so that is going to still net you a return if you buy the right property, most likely. All right, there's no guarantees in this, but I'm just telling you. So I have bought a pretty good number of investment properties that we've been renting out. So we've got a lot of anecdotal and also hard data, not just from myself, but from the more than 300 rental properties that our company manages. And we have managed many of these properties for decades. Okay, our company was founded in 1981. So it is approaching 44 years old as I am doing this video. And so we definitely know the history of all of this. And we have properties all over Greater Houston, okay? In town, okay, and even in the suburbs, and even in the exurbs, which is a new term that came about because Houston became so sprawling that homes are spreading out even beyond the original suburbs to these, extra far away neighborhoods way out there, like in the country, but now they've been developed into, a little bit more, not urban, but less country, less rural living. Okay, so discipline to where you will start. And then whenever you have enough cash to either make a down payment to get a loan for a property or to pay cash for a property, that you'll just keep investing. Now, I will say that my investment portfolio is split, not exactly 50-50, but somewhat between real estate and the stock market. When I say stock market, it's like, stocks, and then a smaller level of like, the ETFs and bonds and other types of, funds. So in other words, real estate versus, the market, non-real estate, right? Non-tangible assets. Real estate is something you can touch. You can walk into the home. Stocks and things is a little more abstract. You can't touch it. So it is definitely good to have a balance. Even though I am a professional real estate broker, I'm not telling you to put all your money into real estate. That would not be accurate. It's not my opinion. And so, I'm honest. Okay. And that's what I'm telling you. All right. The third thing is that you need to know the difference between tax return profit and your actual profit. Some people see their profit on their tax return and it's negative, as in they're losing money from their investments. And so they freak out and they think, I need to sell my investments. I don't need to buy any more as far as real estate. But they forget that on your tax return, you get a lot of different deductions, right? You can deduct for things like mortgage interest or capital expenditures to improve the property, things like that. And you also have depreciation, right? Where your CPA or you yourself, if you're doing your own taxes, can depreciate that property. And that way that also reduces your tax burden. but your actual take-home profit is most likely going to be higher than that. So yeah, those are just deductions for you to save on taxes, but that's not actually money you're losing, okay? So make sure you know how to read your financials and your tax returns properly to analyze that. And of course, reading your landlord monthly statements that your property manager or you yourself, if you're managing yourself, sends you, so that you know what your actual profit is. And make sure you calculate all your expenses and all your revenue, which would typically be just rent. But your expenses could be mortgage if you have one, property taxes, insurance, homeowners association dues if you are part of an HOA, and any repairs, maintenance, upgrades, and things like that. Now, the thing with upgrades though is that's not just money that you lost. It's because you're investing in improving your property so that it's actually worth more. And don't think, oh my gosh, it's going to be worth more, so I'm paying more in property taxes. Maybe, but the county appraisal district doesn't ever have to enter your home. You don't have to let them in. So they don't know that you changed out your countertops and your flooring. So it's not going to necessarily affect that. But what it will do is then make your property more marketable, more attractive, and you can raise the rent in the future for future tenants. Or if you're upgrading while a tenant is occupying the home, you can raise their rent while they're living there. And yeah, so you're getting a return on that investment, okay? So that was my third point, is that tax return profit is not the same as actual profit. Number four is real estate investing, as with any other type of investing, should not be emotional or personal. It should just be just business. Now, we know that people are wired differently. Everyone has a different personality. I've encountered people who really put a lot of emotion into this type of thing. They like to talk about fate and is this property meant to be? And does it feel right? And those types of things. And yeah, maybe you want to go by that. Certainly, I'm a person of faith. I would pray about it. But I'm looking at the hard numbers, okay? And it's a business decision. And that's what it should be. I've had clients where I take them looking at properties, and, I may have told this story in an old video from several years back, or I may not have, but where, one time the person said, oh my gosh, that toilet is so dirty. It's disgusting. We need to rip it out and replace it. And I looked at it and I'm like, yeah, it is really gross, but it looks like it could just use a deep clean. That would be a lot cheaper than replacing the entire toilet. So just things like that, where they go in the home and they're like, oh my gosh, the people who lived here didn't take care of it. It's in really bad shape. There's like scuff marks all over the walls and even holes, and the flooring is disgusting. Like, this is just terrible. I don't feel like I can buy this home. It just feels horrible that someone would have lived like this. Who cares who the person was before? Who cares how they lived? If you can fix it up, if the numbers make sense, where whatever you invest into it, you can get that return from your overall net profit, right? Your revenues minus your expenses, then buy the property. You're not living there. So if psychologically it grosses you out, well, you're not moving in. Someone else will, okay? And they will have never seen the condition it was before. You're going to get it cleaned up and make it look sparkling and nice. Okay, number five, this seems really obvious, and this goes with most things, not just real estate investing, but don't do a lot of talking, take action. Okay, I will tell you that a lot of people talk about investing, or they'll watch a bunch of videos about it, or they may even attend those seminars that are held at hotels or whatever. And some of the stuff that they're seeing is really scammy and shady, and it's not good stuff. Okay, it's not solid. It's not the real deal. Okay, what I'm saying is the real deal, because this is what I have done, and I'm not promising you get rich quick. This is something you got to stay with for the long haul, and that's the discipline that I mentioned before. And so taking that action and doing it now is key. Do not sit around and wonder if the market's going to go down more. If you are going to make a return, and there's not like any sort of right or wrong percentage, right? You can compare it to what, the stock market might give you or whatever. But the fact of the matter is, your stocks could be appreciating in value. If they're not paying you dividends, you're not really getting cash flow. Same with real estate, right? You have the appreciation component, and then you also have the piece where you're getting paid, right? You're getting the take-home cash flow each month. I like real estate because you just can see it appreciate, so much over time. The value is probably never going to fall to zero, because as long as you buy in a neighborhood that's desirable, it's relatively close to major centers of employment, major thoroughfares where people can get to places pretty quickly. There's conveniences, restaurants, stores, and things nearby. it's not a supermarket desert or a restaurant food desert or any sort of place where it's very bad shape, like bad school districts or really crime infested areas. If you're avoiding those types of things and you're buying the right property in the right area, your investment's really probably never going to go to zero. We have seen stocks drop significantly where they either get to zero or close to zero. Companies may shut down, but your property is always there. And if you have the right insurance, it'll even be covered if your property burns down or floods. That's a whole other topic. But the point is that that's why I really like that tangible asset of real estate as an investment, and why most people trust real estate as their favorite investment as well. It's not always the right investment. Not every piece of real estate is the right investment, okay? And so you don't want to just buy the first thing that you see that you can afford. But using an experienced, trusted real estate broker, you can contact me, you can contact someone else that you might find who knows and has the knowledge of all this is really important. Some real estate professionals are not specializing in investment properties. They just help people buy homes to live in, or they might be a listing agent where they sell homes, or they might be a tenants agent where they help people rent homes. They're not in the business of actually helping people invest or being an investor themselves, a successful investor for the long haul, and then also having the experience of leasing out homes and seeing what happens. Leasing out properties and managing rental properties is a complex business. Okay, you're dealing with a property that has a lot of elements. Okay, things that can break down, from appliances to pipes underground, and then you're also dealing with people, tenants. Okay, they can be very unpredictable. Even if on paper they seem great, they're qualified, something may happen in their lives, and then all of a sudden they stop paying rent and they might damage your home, and you're just like, where did this come from? This just seems out of character, but it happens. But it's not that frequent. And so that's the key thing. There is a cost of doing business, just like big box retailers, right? Walmart, Target, CVS, whatever, they experience shoplifting. Does that mean they're going to just shut down their whole company and not run stores anymore? Maybe, but probably not, right? Because they're making enough money from people who are actually paying for the goods that they purchase. So same thing with real estate, is that most tenants are paying their rent just fine. So you get that profit, and it helps cushion you from those times when the tenant stops paying. And I personally have experienced these types of bad tenants I'm talking about. Okay, so I have that experience. I understand, and I can empathize with, sometimes when our landlord clients experience the same. But again, it's not frequent. And so you want to bank on, the majority here and what is most likely to happen. That's what we're looking at in business, and seeing that we can, make a good return overall, even if there's going to be little losses along the way, because you're going to have losses if you're investing in stocks too, or anything else that you do. Okay, so that's the key thing, is don't just talk, don't just think about it, don't just talk with your friends and get all the education about it, but then not act. Okay, as long as you are acting and you're hanging on to those properties and you're in it and you have the guts to stick with it, even through the hard times, that's when you're going to come out doing very well. And I can attest to that. If you have any questions or comments, feedback, ideas for future episodes, please don't hesitate to reach out to me. And I hope you will like and subscribe so that you don't miss an episode. And of course, I would appreciate your likes and your support, and hope to see you again on a future episode of Smarter Real Estate, weekly on Wednesdays. I'm Julie Tam, managing broker of LYN Realty, wishing you a great week. Bye-bye.